So please, guys, just mute your microphones. Okay. So the reason I wanted you to be here, sorry, let me just place Discord on my second screen real quick. Okay. So the reason I wanted you to be here is that I'd like to show you something around the new perspective that we could expect in this session, because I drew some examples and some scenarios in the live session today, but I just found the whole new perspective that could happen. And we'll talk about this section right here on the 15-minute chart. And here's the arrow movement of this section. So as we know, price has just changed character here on the 4-hour chart on several places, right? So there was a 4-hour change of character, or I mean somewhere around here. There's the 4-hour zone, and change character also here on the 4-hour chart too. So 4-hour has changed character in lots of places, right? Meaning that the 4-hour trend has changed to bearish from bullish. And yeah, this is just a whole leg. This is just one simple leg of the 4-hour structure. But on the 15-minute chart, this printed series of lower lows, lower highs, lower lows, lower highs, all the way down to this bottom, right? Okay, let's just focus on this bottom right now. This bottom basically is a low point. It's a swing low point. It's a swing low point on the 1-hour chart or a 4-hour chart. So if I switch to the 1-hour chart, I just did switch to the 1-hour chart because it's cleaner than the 4-hour, because I switched to the 4-hour chart, it will be just a huge candle with a huge wick, as you can see, with no inefficiency. So it's not really clear. It's not really a clear 4-hour zone. But if I switch to the 1-minute chart, you'll see that this movement, this low point, has started this whole order flow to the upside that was leading to a break, or we don't know yet if it was a break or a sweep. So it was leading to a break or a sweep of this 4-hour zone, because, you know, this is a 4-hour zone that had lots of liquidity above it, blah, blah, blah. We talked about this several times. So this low point was leading to a break or sweep of this high point of this liquidity line or supply zone. And after a break or the sweep, it was more likely a sweep because price had just immediately reversed to the downside with a huge movement, right? So this behavior is basically typical for sweeps, right? When price sweeps a liquidity, a huge reversal is being formed. And this is a typical sweep movement when price formed this order flow, swept the liquidity from above the supply zone, but it actually closed above the supply zone. And after a close above, it just returned immediately. It just reversed immediately. Please, guys, mute yourselves. Don't use your microphone, please. I don't know who's using it, but don't use your microphone. So it just reversed immediately. Switching back to the 15-minute chart. So this was that hourly low point that was leading to this whole order flow to the upside, right? That was leading to a sweep of this liquidity line. Price has just reacted on this low point. Price reacted on this low point and created relatively equal bottoms right here. As you can see, first bottom, second bottom, relatively equal lines. So this can be considered as liquidity. And after reacting on this hourly low point, price has just changed character on the 15-minute chart and started a bullish order flow to the upside. Okay, as I said in the previous live session, we can expect several scenarios. We can expect several scenarios playing around with these zones. Okay, but I found a new perspective that could happen. Because technically, this low point right here is a strong low point. Why is it a strong low point? Because technically it was leading to an order flow that broke above a 15-minute, or it was even a 4-hour supply zone. Never mind, it broke above supply zone, the previous supply zone that has caused this character changing movement to the downside, and broke above 4-hour supply zone too. And the whole movement was started from this low point right here, which is technically a strong low point, right? And price has just reacted on this strong low point. Price has just changed character on this strong low point and started a bullish order flow from this strong low point. So what can we expect here? Why am I showing this for you? That what could be new perspective for us? The reason I drew this arrow movement right here is because just ignore the time frame. Just simply ignore the time frame. Sorry, I forgot to draw demands on here. There was a demand tap actually, or a strong low point, and I won't draw a demand here because I won't switch back to the 1-hour chart, but just imagine there was a demand tap, because there was a demand tap. So just ignore the time frame. And the time frame really doesn't matter. If this movement, just take a look at this arrow movement. If this movement would have happened on the 1-minute chart, what would you do in this scenario? If it would have happened on a 1 minute chart, you would just simply set an order limit on this demand zone, right? Why? Because it lines up with the pro trend. I mean, if it would have been on a 1 minute chart. But just analyze this chart. Just analyze what has happened inside of these movements, inside of these candles. Price is forming a downtrend. It doesn't matter if it's on a 50 minute, on a 1 minute, or 3 minute, 4 hour, monthly, doesn't matter. Just focus on the candles, just focus on the movements. Price is creating a downtrend. Price is creating series, lower lows, lower highs, lower lows, lower highs. They returned into a demand zone, and this demand zone changed character to the upside and led to an order flow, which continuously broke structure to the upside on several places, right? But if you take a look at this last piece of leg, this is the last piece of leg. The last piece of leg started from this demand zone down here, which is this one, right? And above this demand zone, price has formed a liquidity line right here. Perfect liquidity line. It's unarguably a perfect liquidity line. First touch, coming up, coming down. Second touch, coming up, coming down. Third touch, coming up, coming down. Fourth touch. 4 touches on this liquidity trend line. If it would have been on a 1 minute chart, basically, you would simply set a limit order on this demand zone right here, right? Because this demand that can be found here and here is heavily part of the liquidity. So, according to just a common sense, this is liquidity. So we won't be able to look for long opportunities on this demand zone because it's part of the liquidity. If it's part of the liquidity, the last thing we'd like to do is to become part of the liquidity. So what can we do here? What is the typical scenario that we could wait here? Simply wait for the break of this demand zone, because the break of this demand zone will happen. The break of this demand zone will simply happen. And if the break of this demand zone happens, or the sweep happens, we will have the scenarios that I just explained in the live webinar, right? An hour ago. We will have those scenarios. But if price comes down to this demand zone down here, then I believe if price breaks below this demand zone and it comes down to this demand zone, the trend won't be changed to back to bearish. Why? Simply because this is just a liquidity sweep. So if price breaks below this demand zone, the trend won't be changed back to bearish. If price breaks below this second demand zone, this extreme demand zone right here, then the trend will be changed back to bearish, and we'll be able to safely execute short trades. But until this demand zone breaks, this extreme demand zone breaks, there won't be a change in the trend, and the 15-minute order flow still remains bullish. So basically, our order flow at this region is bullish. On the 15-minute chart, this is a bullish order flow, so taking longs will be considered as pro-trend trades. Taking shorts will be considered as counter-trend trades. But, as I said in the live webinar, we'll be able to take shorts starting from this break. If price breaks below this zone, we'll be able to take shorts targeting this demand zone, and this will be a counter-trend trade. We can consider this as a counter-trend trade movement, since I wouldn't really call the break of this zone as a character-changing movement or just a trend-changing movement. It will be just a liquidity sweeping movement. And if this demand zone is being tapped, then this demand zone will give us a good opportunity to take any long. If this demand zone can print us a good long opportunity with good criteria, that will still line up with the 15-minute pro trend, and this will be still a 15-minute pro trend according to the 1-minute chart. And if this demand zone is being tapped and a confirmation happens here with a good confirmation, for example, 10 criteria trade, 9 criteria trade, any criteria that will be good for you, and you execute the setup here because price gave us the entry criteria, then we'll be able to target this line, as I said earlier. If we are targeting this line, this liquidity line, or the supply above this liquidity line, we'll be able to book high risk-reward ratio. Let me just move this from here. We'll be able to book high risk-reward ratio. But here comes the interesting part, that the higher time frame trend is still bearish, right? So the higher time frame trend on the 4-hour chart is still bearish. So according to the, for example, the plan webinar, where I explained how to use the higher time frame trend that lines up with the lower time frame trend, how to trade the pro trend, how to trade the counter trend. According to this webinar, if price touches the supply zone up here, this will still line up with the 4-hour order flow. And if price creates a, mute yourself, please. If price creates a change of character here and comes up to this supply zone, and this supply zone prints as an entry opportunity, prints as a confirmational entry opportunity, then we'll be able to still follow the main trend, which is the 4-hour main trend. So if this supply zone, we'll be able to hold price, because this is the less recent supply zone that we care about, that is about the liquidity, yes? So if this 4-hour zone can print us an entry opportunity, then we'll be able to execute really good bangers to the downside. We'll be able to execute really good short opportunities to the downside, targeting swing low points, targeting the swing liquidity point. For example, this will be a liquidity to take after mitigation of the supply zone. And yeah, we'll be able to take really good short scenarios on the supply zone. But what's the moral of the story? Why am I showing you this scenario? Why am I talking about this? Simply because on the chart currently, you can identify lots of liquidity. So basically, this whole chart is about liquidity, right? There's liquidity, there's liquidity, there's liquidity. Everywhere is liquidity. The reason I'm showing you this is because I like to clarify the liquidity thing in you guys to actually help you to which liquidity will be swept and when it will be swept. So in my expectation, in my perspective, sorry, let me just mute someone because the microphone is on. Whose microphone is on? Mute yourself, please. Everyone, just mute yourself. So, in my understanding, in my perspective, this liquidity line up here has a higher chance to be swept first than this liquidity line has a higher chance to be swept second. Of course, this liquidity line will be swept first. This is 100% sure, and the sweep is actually happening, as you can see, just when I'm talking about it. This liquidity line right here will be swept first. This is the first liquidity that price has to take in order to sweep any of the other liquidity. So if price sweeps this liquidity, and the sweep is happening currently, but it just formed another bottom, it just formed another liquidity here. If the sweep of this liquidity happens, then more likely this zone will be tapped here, down here. And if the zone is being tapped here, it will print us a good confirmation entry. And I'm basically 90% sure that the confirmation entry will happen on this low point. Why? Because simply seems like a fractal confirmation is happening, because this was a strong low point. It was an hourly or 4-hourly strong low point that has caused the less recent leg on the higher time frame. This is the less recent leg on the higher time frame, right? This low point has started this less recent higher time frame leg that broke above supply zone and broke above 4-hour supply zone too. So price reacted strongly on this less recent higher time frame low point, extreme low point, changed character on it. Then after a character changing movement, it formed the demand zone. Then after it formed liquidity above the demand zone. So we have another liquidity lines right here and right here. In order to sweep this liquidity line, we have to collect this liquidity, to collect enough orders, to collect enough stop losses in order to form an impulsive movement to the upside that will be able to help us to collect liquidity from this line. And after this liquidity is being collected on the upside, so this liquidity is being collected probably the supply zone. This supply can be tapped. And after the mitigation of this supply zone, all of these orders will be converted into new short orders. And if these new short orders are being opened here on this supply zone, then that will be enough to sweep this downside liquidity. So everything comes in order, one by one. First, this one. First, this will be swept. Then after it will, this demand will be tapped, or this demand won't be tapped. Then 5-minute demand zone somewhere around here will be tapped, and it will give us confirmation. After this liquidity is being swept, it will collect enough power to sweep the upside liquidity. So from all of these long stop losses, price will be able to actually collect, open more long orders on this demand zone. And all of these new long orders will be able to help us to sweep the upside liquidity. And if this upside liquidity is being swept and this supply is being tapped, then all of the power of these short stop losses will be able to help us to sweep the downside liquidity and continue the main trend movement to the downside, because the main trend, as I said on the 4-hour chart, is bearish, right? So if this liquidity is being collected, more likely this liquidity will be collected on the upside. If this liquidity is being collected on the upside, more likely this liquidity will be collected, and the overall every single time frame will line up with the higher time frame again. So yeah, that's what I'm expecting. That's what I'm seeing on the chart. And I just wanted to clarify this because all of these liquidity lines everywhere on the chart, all of these liquidity lines here, can be hard to understand and frustrating for you. But I just wanted to clarify this for you to have a better perspective about what liquidity will be swept and when it will be swept and how to play around liquidity. So just once again, with the help of this liquidity, price will be able to create an impulse movement to the upside, because this is how liquidity works. Buy orders are being collected here. And of course, if someone sets a sell stop here, if price breaks below the low point, their stop losses will be collected too after on the upside movement. So their stop losses will be collected here. But just talk about this liquidity line. This liquidity line, if all of these orders, all of these stop losses will be collected somewhere around here, then these stop losses will be collected, demand will be tapped, confirmation will happen. And with the power of these new orders that can be opened here on this block, it will be able to help us to actually push price to new heights and sweep this upside liquidity. And when after this liquidity from above the supply zone is being swept, all of the power of these stop losses will be able to help us and will be able to help price to reverse price again on this supply zone. Because with the help of all of these old orders converted into new orders, we push price to the main direction. And the main direction, I mean, this liquidity lines up with the main direction. And if this liquidity is being swept, this will be the fuel to power the shorts. Or after this liquidity is being swept, price will just simply reverse to the upside again. It will create a breakout structure here to the downside, sweep the liquidity, collect the orders. And after the breakout structure and the order collection, it will just simply reverse to the upside again. And sorry, let me just remove it from the chart. It will reverse to the upside again, tap into another supply zone, and continue the way down. This is how a structure works, right? This is how the structure works around liquidity. Structure combined with liquidity is the most powerful tool in trading. If you understand liquidity and if you understand how the structure works, you'll be able to execute banger trades. And when I'm talking about banger trades, I'm referring to, for example, 30 or 40 or 50 risk-reward ratio trades, because these setups will be able to give you 30, 40, 50 risk-reward ratio trades, simply because you're trading aligned with the higher time frame order flow. Because the lower higher time frame, which is the 50-minute, is showing us that this liquidity will be swept and this demand will be tapped, and the continuation to the upside will happen because here's this liquidity take that price has to sweep in order to collect, in order to continue the main movement. And if you're trading aligned with this higher time frame, lower higher time frame 50-minute order flow, and if you're opening a fractal conformational entry opportunity here, you'll be able to execute a banger, because if you open a position here, you'll have a really, really, really high chance that you'll be in the trade when you're targeting this line here. And if you're just simply opening a position right here on this line, for example, with a 2-pip stop loss, you're opening a position with a 2-pip stop loss here, and you're targeting just simply the liquidity line, that will give you a 25 risk-reward ratio trade. And when you're out of this trade, all of the orders are being swept out, all of these old orders are being swept out, all of the new orders are being opened. There will be a new confirmation entry opportunity. And if you're opening this confirmation entry opportunity, that will be lined up with the higher time frame trend, right? So with the 4-hour trend. And if you're trading with the higher time frame trend, then you'll have a much bigger chance to execute a really, really, really high risk-reward ratio trade. So for example, if you open a position here with a 2-pip stop loss, or just calculate simply with 3-pip stop loss, because we don't know yet, with 3-pip stop loss targeting this liquidity line, it will give you again 25 risk-reward ratio. But if you're calculating with 2-pip stop loss, it will give you a 40 risk-reward ratio. So that's how you executed in the past few months, in May, June, July, these 30-40 risk-reward ratio trades. If you remember, in June, I just executed 2 30 risk-reward ratio trades. That's how you can actually execute high risk-reward ratio trades, by simply trading around with liquidity combined with structure. And yeah, I just wanted to show you this to understand how liquidity works. And as you can see, sorry, I'm having a stroke. As you can see, this liquidity has been swept. Price is just doing exactly what we are expecting it to do, because it doesn't matter which time frame is down. The only thing that matters is that liquidity. What do we know about liquidity? It will be swept. Liquidity will be swept. And what do we know about liquidity sweeps? This liquidity is being swept. And for example, the trend is bullish, and if there's a liquidity for a demand zone, then after liquidity sweep, we can expect a reverse on this demand zone. Either if it's a 1-minute time frame, either if it's a 15-minute time frame. This is how it works. Just imagine if it would be a 1-minute, this will be a 1-minute time frame, and price printed this for you. You see this on your chart. What would you do in this situation? You would simply execute an order limit on this block. Why? Because this is how structure and liquidity works. You know that if all of these orders are being swept, you'll have a chance to open a position here, because all of these old orders will be converted into new orders right here on this block, and you'll have a high chance to execute a banger setup up to the upside. Actually, there's no difference between the 1-minute and the 50-minute time frame, because you see the exact same thing. There's liquidity swept, next order block. The only difference is that you need a confirmation entry after the mitigation of these demands, all right? But if the confirmation, mute yourself, please. Mute yourself. Don't use your microphone, please. I don't know who's using. Who is this? Okay. So where was I? Oh, yeah, the only difference that you need is that you need a confirmation here. Of course, because this is a 50-minute zone and not a 1-minute zone. On a 50-minute zone, you're waiting for a confirmation. But if a confirmation happens, this will be a really, really, really strong setup because simply it lines up with the lower higher time frame, so the 15-minute. And if you're executing this, guys, mute yourselves, please. Why is it so hard to mute yourself? My God. Okay, I found it. So this will line up with the lower higher time frame, so with the 15-minute chart. And of course, this is a pro trend trade according to the 15-minute chart, right? It's straight up in the PDF builder plan. It's straight up in the PDF webinar. The plan webinar, that this will be the 15-minute pro trend trade, and you'll be able to execute setups here. And what did I tell you in that webinar? That you'll be able to execute these setups targeting the next recent 4-hour / liquidation area, which will be this one. So I'm just asking you, I will write it here to the chat. Just react on the message, please. Was it understandable? Do you have a better perspective? Just react on a message. You don't have to say yes, just react on a message, please. And that's it, guys. That's it. That's it. The liquidity has been swept. All of this liquidity from this region has been swept. As you can see, price will tag this zone, price will mitigate this zone, and it actually mitigated this zone. And yeah, we can wait for confirmation inside of this zone. And more likely, as I said in the previous webinar, this zone has two outcomes, right? The first one is the flip of this zone and the continuation to the downside. The second outcome is the change of character on this zone and the continuation to the upside. These are the two outcomes of a zone. Every zone will have two outcomes. First one is the break. Second one is the confirmation of that zone. These scenarios that you can expect in a zone. But in this scenario, the confirmation of this zone has a much higher chance because it will line up with the 15-minute trend. And if that scenario happens, so the confirmation happens here, that will line up the 15-minute trend, and that will lead an order flow that will lead up to the higher time frame trend. And if that higher time frame trend zone and liquidity is being swept and being tapped, then if the confirmation happens, that will line up with the higher time frame trend. So yeah, I just share my expectations, my new perspective. I believe this will have a high chance to happen because if you take a look at this, price will mitigate this zone right here. Maybe the 50% of this zone will be mitigated. Confirmation will be given here. And then price will build up liquidity to take, right? So if price mitigates the 50%, then here will be a liquidity to take for the upcoming shorts. And this will line up with the higher time frame order flow once again, because this will have a chance to create a character changing entry. You will execute longs up to this zone. There will be a liquidity to take being left here. This liquidity to take will be grabbed when price lines up with the higher time frame order flow. So this liquidity to take will be formed for the higher time frame order flow when it lines up with every single time frame, right? So after the confirmation happens here, this liquidity right here will be grabbed because this liquidity is the fuel for the shorts. Yeah,